So without further ado, super excited to start off by introducing today's panelists. Karan is joining us today from StratiFi. Karan, would you tell the audience a little bit about yourself?
Yeah, absolutely. So I'm on the key accounts team at StratiFi. I work very closely with advisors, really in all types of firms, from solo advisors to firms with 100 plus advisors. But I work closely with them to ensure that they're successful with StratiFi, as well as get them familiar with StratiFi. And I'm stoked to be on this call today.
Thanks, Karan. Super excited to be presenting alongside you today. Should be a great session. Also really excited to introduce to everyone my colleague Dave, representing BridgeFT on today's call. Dave, would you tell the group a little bit about yourself?
Sure. Thanks, Carolyn. And good afternoon to everybody. And thanks for joining today's webinar. My name is Dave Hagan. I'm the Chief Commercial Officer here at BridgeFT. Joined Bridge just over 3 months ago, coming over from Goldman Sachs, but have been in the wealth tech space now for a little over 22 years. And real excited to share both our partnership here with StratiFi and some real interesting sort of trends going on in the marketplace.
Yeah, thanks so much, Dave. And that kind of segues nicely into, did you want to just sort of set the context a little bit for why we decided to put together today's session?
Sure. So, real excited, as I said, about today's webinar. I believe the topic is very timely and very relevant, particularly for advisors, who are proactively looking for ways to grow their practice in this, uncertain market conditions. It's a bit of a sort of an up and down the last few months in regards to the market. And as you can imagine, that has brought, sort of an unprecedented spike in volatility. That's created a challenging environment, not only for advisors, but for their clients. Clients are undoubtedly experiencing that impact. Reevaluating investments, looking for guidance. Trying to find a successful path to really get through these sort of uncharted waters. So as you can see from this chart, I figured I'd put this in here. Market downturns happen, but they don't last forever. So as you're thinking about the market, engaging clients, it's really about what has occurred historically, and using that as sort of the precedent. So over the last 70 years or so, the market has experienced a number of different dips and spikes, some more significant than others, as you can see here by this chart. And really in this new market climate, there's still many questions that remain unanswered. How long will it last? To what extent will this impact have on on the markets, and more importantly on the wallets of your clients? It's also particularly relevant, for advisors, particularly for advisors who are getting paid 4 times each year, and a 30%, 40% dip in the market has a direct hit on their practice and on their revenue. And I think it's really important to sort of put that into sort of the historical context of where the market has been and where it is today.
Yeah, I think that you beg a really good point, Dave. Thanks so much. And we have had a ton more people jump on the session just in the last minute or two. So I did want to just reiterate that we do have a live Q&A available at the end of today's call. So again, as we're going through the content today, guys, feel free to submit your questions via that Q&A tool in the Zoom platform, and really looking forward to getting those questions at the end of the call. So that being said, before we dive into some of those actionable strategies around growing your book, as well as improving your client communications, Dave, could you just tell the group a little bit sort of about the BridgeFT StratiFi partnership and the onus for today's joint effort?
Yep, happy to do that. And for folks who just joined us, you didn't miss too much. I was just really setting the stage and putting into a little bit of historical context of sort of the market volatility and an environment that we're in today. But excited to talk about our partnership, and what I'll say is lots of research and sort of analysis on both sort of market dynamics and ultimately sort of the value of an advisor, and that's typically amplified in periods of the sort of high volatility and market distress. So there's no doubt that embracing the turbulence and proactively engaging clients will have a material impact on not only your clients but your practice outcomes. What should you be doing now to ensure you're having quality conversations with your clients? From our perspective, it really comes down to having the right data and the right technology. And we're really excited about sort of the timing of our partnership with StratiFi and sort of the collective, sort of engagement here to provide a more of a connected experience for clients of BridgeFT and StratiFi, really designed to make it easier for users to accurately assess and monitor client risk across their total wealth picture. And what that means, we'll sort of touch on that as we go through the webinar here, but being able to connect very seamlessly, data and a complete picture of your sort of client's portfolio that will drive, powerful risk analytics to have those critical conversations at different points in time, particularly in this market volatility.
Got it. Thanks so much, Dave. And for people joining us on today's call that aren't familiar with BridgeFT, would you mind just kind of quickly giving an overview?
Yeah, let me give just sort of a quick 30-second sort of snapshot here on Bridge for those who are not familiar. And we'll talk a little, and Karan will talk a little bit about StratiFi as well. So, Bridge, really powers many of the industry's leading financial advisors, financial institutions, TAMPs, fintechs, ultimately delivering better data-driven outcomes for their clients. We do that through a multi-custodial software and data aggregation platform, where we automate a number of critical sort of back office operations, providing a sort of total wealth picture that powers a number of different next generation wealth apps, whether they're our own set of wealth applications or clients as well. We very much view ourselves as a technology enabler. We do that through modern cloud-based API-first technology. We have two sort of core offerings: our Atlas platform, which is a fully integrated portfolio management system, and our developer API suite, which offers full connectivity to that multi-custodial data aggregation platform, particularly powering firms who want to build and control their own unique client and advisor experiences as well. So just sort of a quick rundown of Bridge. I'll hand it off maybe to Karan to talk about StratiFi.
Awesome. Thanks, Dave. And I'll match with the 30-second overview myself. So essentially what StratiFi is, it's a risk management platform that essentially provides a one-stop shop solution for portfolio risk analysis, client risk profiling, and compliance. So firms can manage the right risks that are, essential for their success. And we do that in a couple of different ways. We allow the advisors to generate extremely rich reports, help them analyze risk at a portfolio level, at an individual account level, and help them ensure that their clients are in line with their goals.
Got it. Thanks so much for going through that, Karan. So now that we've gone through some of the kind of basics of BridgeFT and StratiFi, we will go ahead and dive into the content for today's session. Part one, focusing specifically around how to sort of frame and set the stage to talk with your clients about risk. So Dave, if you could kind of kick us off with some initial thoughts.
Yeah, happy to talk about here. And I think, again, very sort of timely in regards to sort of the market volatility, where risk sort of plays a role. One sort of underappreciated consequence when, returns turn negative and volatility spikes are really the risk to client outcomes and ultimately, to your practice itself. I very much believe those two are, one and the same. And so is the solution. Simply put, improving client outcomes is the key to better practice outcomes. So having a complete picture of your client's assets, as we start to talk about, having the right data and the right tools, and being able to leverage that to talk about, sort of key factors, particularly risk, is a prime example of why, investors need, your engagement, your communication and proactive behavioral coaching now as much as ever. This is an opportunity for you as an advisor to shine and being able to, to really take a more proactive approach to understanding sort of risk that's impacting their portfolios, easing their minds as to, what's going on in the market today versus that impact could have longer term, near term and longer term to, sort of investment outcomes. Quite frankly, this is where StratiFi shines the brightest, and helping to sort of illustrate those risks along the way. So with that, I'll hand it off, Karan, to you to really talk about those risk factors.
Yeah, and before we even get into the risk factors, I kind of want to explain how advisors really utilize the system. It's really a couple-step process. Initially, clients will answer a questionnaire. I'm sure a lot of the advisors on this call are familiar with questionnaires, but that helps us really understand the client or prospect's risk profile. And then from there, utilizing systems like Bridge, where we're able to pull in the data into our system. We can go ahead and score those portfolios and analyze those portfolios for four specific risk factors. We kind of take an institutional approach to risk analysis. We will highlight those four risk factors further down through this presentation. And then from there, advisors and clients can essentially discuss the results, showing them this is your risk profile. This is what the analysis of your portfolio says you should be at. And it really helps advisors understand their clients while also educating their clients on the different risk factors and the risks in their portfolio.
Got it. Thanks so much for going through that, Karan. I think that makes a lot of sense. And in light of kind of all of the volatility going on in the market, how are you seeing the advisor perspective on how they are leveraging technology to talk about client risk sort of in new or different ways?
Yeah, that's a great question. Well, really with the advisors that we work with, a lot of their clients that are going through this right now with regards to how the markets are, they were prepared for it. And really that's kind of what we want is we want the clients to be prepared that there shouldn't be any surprises when it comes to their portfolio. So they should understand what would happen if the markets were to plummet like they have. And we really help them do that by looking at these four specific factors of risk. We like to look at 2 on the downside and 2 on the upside. So we look at tail event risk and diversification risk, kind of highlighting the downside, what would happen, and volatility risk and concentrated stock risk kind of highlight the upside. But essentially what our advisors have done is they've explained these risk factors to their clients, help them understand the risks in the portfolio. And, if the client wasn't comfortable with, the high tail event risk and what would happen to their portfolio in the event of, kind of what's happening right now, then they can make changes and kind of take kind of measures before the situation occurs.
Got it. I think that makes a lot of sense. Dave, did you have like any additional kind of thoughts or comments before we move into the second section of the presentation?
I think we'll touch on it as we go through it, but I think the critical piece here is, risk is an important factor, throughout the sort of the client journey. And when you start to think about that initial engagement from an advisor perspective, and as you're looking at sort of a client's complete picture of what they will bring to the table, as you're making the case for them to sort of trust you as an advisor to continue to invest and move assets over, all the way through to times like this. How does risk play a factor in sort of investment strategies? How does risk play a factor in mitigating risk? How does that play a factor in that reach and conversations that the advisor is having with their clients as well? Ultimately, it comes down to having a complete view into what that client brings to the table, what type of activity they may have going on within their portfolios, and then ultimately the factors that that Karan mentioned there, and looking at it at sort of both sides of the equation.
Yeah, absolutely. And I think we'll kind of dive a little bit more into the details and some more actionable kind of thought processes in the second portion. So we're going to transition to talking a little bit more about how you can actually increase client satisfaction, even while your clients may be experiencing some concerns around performance, given the market conditions. So Dave, could you kind of kick us off in this section by talking a little bit around data, the importance of data empowering these types of client conversations?
Totally. Just to sort of reiterate something I said earlier, the idea of the right data and the right technology are very critical to sort of the long-term practice success. And whether that is to reassure existing clients or to capture new ones, seeking a fresh start. Having that foundation as a sort of a driver to being able to sort of proactively look at things that are going on within a client's sort of view of their investments. So what can you do? Given the declines in investor portfolios and expectation that volatility may continue, whether it's 12 months, 18 months, or longer, this is an environment that really is ripe with opportunities to deepen, your connection and your relationship with your clients. And whether that's through, your ability to execute and take the time to proactively communicate how the investments are doing, where to make shifts in strategy, how to have a longer term outlook related to lifestyle goals, so retirement, education, major purchases, near term sort of activities that'll drive that. So having the right tools to do it, whether that's reporting, whether that's proactive communication tools, critical data can also provide, insights into happenings within a client's portfolio. So alerting you to sharp declines, major money movement activities, or even a shift in those near-term goals. Staying connected, goes a long way into deepening those client relationships. And I think the technology data are critical, but being able to surface that information so that you are picking up the phone, you are reaching out, you are communicating as an advisor at the right time, to really reassure and reaffirm, the strategy and the long-term path that you've put your client on, is really, sort of foundational to the relationship that you've built.
Got it. Thanks so much, Dave. Really appreciate that. And Karan, in this next slide, could you kind of go through some of the strategies again that you're seeing advisors use successfully to have sort of deeper conversations with their clients around risk?
Yeah, absolutely. I think the biggest thing for us is obviously we want the advisor to set clear expectations with their clients and even with their prospects. So really with our system, what we're helping them do is highlighting different risk factors. In this image, you can see that I've selected one of our risk factors, but this is kind of prevalent right now, and it's the tail event risk rating. So they're setting clear expectations, showing their clients before it even happens, what would happen if there were sudden severe market losses, between 6 to 8%, or between 8 to 10%, or even 10+%. And they could see what would happen to their current portfolio. So they understand going into an event like this, what should happen to their portfolio, what could happen to their portfolio. It kind of helps them maintain long-term focus. But then, if they're not comfortable with that, then we've seen advisors kind of go in, see the different risk ratings and kind of manipulate the portfolio, or recommend them to one of their own core models that more closely aligns with what the client or prospect is comfortable with. I think another thing that's been very effective, and I'd understand it as a client myself, but being able to show how your portfolio would have performed during different market conditions. For example, during COVID, that one's kind of fresh in everyone's mind. It's still kind of going on. Global financial crisis, and then some upturn markets as well, such as the 2013 taper tantrum and 2019. But being able to show your client, this is how your portfolio would have performed during COVID. Is that something you're comfortable with? If not, we need to make some changes to the portfolio, or maybe we need to move you into a different strategy.
Got it. Thanks so much, Karan. And on the last slide, I had put a footnote kind of at the bottom. Just the really cool thing is that leveraging BridgeFT and StratiFi together, you can ensure that all of those recommendations are being kind of powered and fueled by accurate data. So that then is leading to more impactful client conversations. So I think that's a really great crux kind of between the two organizations and our impact that we can have for advisors. So thanks so much for going through that. Super excited to move into the third portion of the presentation, which is about growth. Everyone wants to grow their practice. So in this next section, we'll look at some strategies that we have seen advisors deploy successfully. Karan, if you could kick us off with some tips and tricks, that'd be great.
Yeah, absolutely. I think, there's different types of prospects. We call the prospects that, at least the advisors that we work with, they say they got aggressive investors and they've got the cash hoarders. And, there's different strategies that you need to use with different types of prospects. But I think the one thing that's super helpful, especially during down markets, is being able to show them the benefits of the strategy or model that you're recommending to them. And oftentimes it's a little hard for them to understand, different factors, different risk metrics, whatever it may be, what does Sharpe ratio mean, or what is, sigma bands, whatever it may be. Clients don't necessarily understand that, neither do prospects. So being able to present information to them in essentially layman's terms, but simple, easy to understand reports, we've found, and our advisors have found, that that's been super impactful when they can very simply show them, this is your current portfolio, this is the portfolio we recommend to you, and then making it very, very simple, a lot of images, a lot of simple terms. I think that's been the most impactful during prospecting, specifically during a down market.
Yeah, absolutely. I think you make some really good points there. Dave, any kind of additional thoughts and ideas around kind of how to look towards growth even in difficult market conditions?
Yeah, no, for sure. And I think we have a very similar sort of approach or vision in regards to, really providing sort of a simplified, easy to understand sort of approach. And whether you're working with clients directly or you're prospecting out there for new business, allowing investors to really absorb and consume the information that's relevant to them without making it overly complex. I think particularly in an environment like we're in now, being able to really sort of settle and provide a clear sort of path or a clear vision will be instrumental and will go a long way, to really drive that engagement and that success that you have, again, with clients or prospects. And I think, one is, focus, not just on the markets, but on proactively increasing your communications, accessibility, and even empathy, right? Understanding sort of what your clients and prospects are going to. It's obviously much harder, to have conversations when markets are down and volatile versus when, what we've experienced over the last few years in regards to sort of up and growing and really calm. It's really only natural that you feel reluctant to call your clients, in times like these, or even reach out to new prospects. How do you go build new business when you're struggling and answering phones and responding to client inquiries? But however, what we've heard from advisors is, by doing so, you're going to be in a better position, with your client base. They're going to really appreciate you reaching out, and we very much see that, at Bridge. Now's a great time also to step up your business development and prospecting efforts. Many of our advisors have said this is, it's definitely a challenging time, but it's really a ripe, time to go prospect for new business, because there are folks who don't want to pick up the phone, who don't want to have that tough conversation with their clients. And again, it all comes back to having a good, clear view into what that engagement looks like with your clients. What is their current situation? And quite frankly, if you look back on most recent market, major market downturns, including the most recent one, and I would imagine StratiFi, Karan, your tool will very much illustrate this. But accounting for current returns, clients would benefit from staying invested or making just slight tweaks, and that goes a long way to really providing more satisfied, loyal customers, and really allows them to have a better sense that you're there in these difficult sort of times. So that goes for, as I said, goes for both the client relationships you have today, but as you're proactively looking for new business, now's an opportune time for those conversations as well.
Yeah, absolutely, Dave. Very eloquently put. And I think ultimately it shows there is a silver lining kind of even during these times. And I think with the right approach, that could be great. So I did want to transition us into the Q&A session, just because we are like in the final 5-ish minutes of today's call. So anyone, go ahead and submit your questions now via the Q&A tool in the Zoom. We do have one that we can kind of start off with off the bat. So Dave, if you want to tackle this one, what data is being integrated from Bridge to StratiFi?
Yeah, no, good, great question, and actually one that comes up a lot, in particular with sort of our integration with folks like StratiFi and others. Our platform offers, as I said earlier, a multi-custodial data aggregation, and we do all the normalization and enrichment that goes along with that. Uniquely, we have connectivity to all the major RIA custodians, so folks like Schwab and TD, Fidelity, Pershing, and others, as well as some a couple hundred unique other data sources. And what we'll do is we bring that data in to our aggregation platform. We do all of the heavy lifting to make sure that it's accurate, complete, and truly trade ready, and deliver that through our API. And our relationship with StratiFi offers them the opportunity and their clients to get that total wealth picture from across all the different custodians and back offices and trust platforms and crypto platforms and really all these different sort of asset services through one single connection.
Got it. Thanks so much, Dave. So I just, let's see. Okay, so I did see one question come in. That one's a little too specific for us to tackle on today's call, but we can give you a follow-up offline. I didn't see any other questions come through as of now. So if we want to go ahead, Karan, did you want to kind of give some final thoughts and let the audience know how they can get in touch?
Absolutely. So, I mean, first off, very much appreciate you guys putting this together and everyone that attended this call. That being said, if you wanted to learn more about StratiFi, feel free to visit us at stratify.com. If you had any questions specific to the product, or if you wanted to see a demo of StratiFi, feel free to reach me at karan@stratify.com. I'm happy to set anything up, and we can always go from there.
Awesome. Thanks, Karan. And any thoughts, Dave, for those that are interested in learning more about Bridge?
Yeah, no, definitely. And thank you, Karan, for joining today's webinar. Super excited about the partnership and the integration. Real excited to see, how the StratiFi clients will continue to sort of prosper and grow, particularly in this environment. For folks who are interested in learning more about Bridge, feel free to visit our website at bridgeft.com. You can also reach out to us via email. On our website, you can go ahead and schedule some direct sessions as well with the team, but more than happy to answer questions, dive in a little deeper. I think from our perspective, really, doing a bit of a self-assessment of, are you, equipped today, to help your clients, truly navigate, these uncertain markets. And if not, let's start to talk about how do we ensure you have that, that right data and that right technology to, to grow and prosper. Folks are truly looking at that, and we're happy to help.
Absolutely. Thanks so much, Dave. Thank you, Karan and Dave, for sharing your insights today. I think we covered a ton of amazing content in only a little under 30 minutes. So that's pretty amazing. And a big shout out to everyone that took time out of their afternoon to join us today. Bridge really looks forward to hosting you for future sessions. So thank you, everyone, and have a wonderful day.